Happy New Year, everyone. Welcome to the Euro trade. We're going to see what the metals are doing this fine morning. If you're new here, welcome. My name is Deeyana Angelo, aka Market Stalker D, and I've been trading for about 19 years at this point. I was a session musician beforehand, and I swapped the guitar pedals for volume profile, the auction theory, and some gamma levels. Alright, so the first thing that I'm noticing is that we've had a move back towards the highs that were made before the new year began. And I have some levels that I've taken from the options chain where the dealer positioning is happening. So we're going to see what they want to do with those. The first level of interest is 75. 75 was a previous call wall last week, and now it's been broken. So that would be my first area where I would like to see what the price does. If we hold 75 and they kind of continue to buy, there is a potential for a gamma squeeze, and we still have a lot of room before we exhaust statistical averages, whether that's the London average session range high, which is at 76, or the overall 24-hour range, which would fall closer to 77.50, remains to be seen. I personally don't like doing breakouts because I think, especially on commodities, they can be a little bit fickle, especially because during the breakouts, the commodities tend to be more prone to having a liquidity vacuum first and a pullback and then a continuation rather than just like some clean breakout. So even if we get a breakout, an alternative scenario, alternative hypo for me would be to wait for a retest of previous Asia high and then see whether they're engaging to the upside again. To play the devil's advocate and to look at the bearish picture, if we don't hold 75 and we also lose VWAP, I'm then looking towards 73 area. 73 is not too far away from the Asia low, but also not far from the actual value high from Friday. And even though we are pretty high up, there's always a chance of a mean reversion. So we need to be aware of that. But we are pretty high away from that. Typically, if I'm going to try mean reversions just blindly on the fly when COMEX opens, I would like to see that closer to the value, so I would like to see it within about 1%. And as you can see, we massively overshot that. It means that it's been a change of sentiment rather than some mean reversion opportunity. So it's a repricing. It is not a potential for mean reversions. Now, obviously, if we lose 75, then the gamma side of things is going to be a little calmer, and that means we're going to potentially see mean reverting moves, and then those ebbs and flows become a little bit more high probability. But still, I'm not sure I will be chasing that to the downside. Instead, I would wait until we reach 73, maybe even 72.50. Wick below it. So this entire zone here is where I would like to definitely be a buyer. This one here is more of a line in the sand, so just, if you don't get chopped up, because you have to wait for some pretty my dogs are going insane. I'm so sorry. Let me see if I can do a little filter here. Alright, so I'm using the noise suppression, but yeah, we've got howling going on, probably Amazon or something. Yeah, Amazon man is definitely not their friend. So yeah, we've had people sending stuff over, and yeah, but yeah, we have the Kevin Choir at the moment, so hopefully this noise suppression is gonna take care of that. It's what happens when you have a horde of dogs. They just break into a wolf-like howl. Right, so line in the sand around 75. If you're kind of trying to go to front run that is the cause where people kind of flip and flop with directions. Long, short, or is it long, is it short? And then they get really cut up. So you don't want to be doing that. I do hope that my husband is going to sort this out, because they are very loud and they're messing with my focus. They are watchdogs. They're watchdogs. They're half Pomeranian, half Cavalier. And Poms are watchdogs. They bark at everything. Unfortunately, about 80% of the dogs have the Pom side of things, so it gets very loud. They're small, but very loud. And then we have two silent ones. They just don't bark. They're just like, whatever, man. Yeah, so line in the sand, the levels need to have some firm triggers in order for you not to get chopped up. Similar to, breakouts. If you're going to run a breakout, it's better to confirm a breakout and then catch it on a pullback, because very frequently, even if there is a breakout, especially to the upside, it's like to the downside, I could argue that it's a little bit different, because it's usually some form of panic selling. So you have less time and, to get involved before it just kind of runs away completely. But to the upside, I always found that upside movement is more or less crazy, I would say. So if you're just front running it and then it comes back on you, and then let's say it retests Asia high, and then you exit and then you try short, then they pull it back over the Asia high, then you try another long. You don't want to be doing that, okay? So you want to have very clear triggers how you're going to enter this. So the way I like to do it, I like to wait for, at the very least, like the very minimum, 15-minute candle close above the area that I'm looking for, without meaningful selling wicks. Meaningful being defined as the wick not being bigger than the third of the overall candle length. So not just the body, but the overall candle length. But if you have a wick, I would wait. Definitely wouldn't short it, especially if the close of the candle is above the reference point. So I wait. So I wait for, another signal to see whether we have any potential. I also look at volume at that point. Are we growing in volume? Is it just a spike, kind of like a moderately large spike, and then immediately just quieting down? That's more susceptible to being a run through Asia high. So the stop and smash and grab, as I like to call it. So it's basically Asia high. They smash through it. They come down below it, and they just aggressively step into the opposite side for shorts. So that's definitely still a possibility. We haven't done that though, so just purely from the time of day perspective, I think we're getting into the period where if we do get a breakout, it's more likely they're going to keep running. But it can happen. Like if I'm looking for liquidity sweeps above Asia high, that needs to happen in between sort of my 7 a.m. and no later than about 9:30, so around the time when I start these streams. If it happens later, it's more likely to be a true breakout than anything else. But then that breakout typically doesn't have as many legs to kind of last for the entire day. So you would be looking to have a huge reversal when COMEX kicks in, and then to fish for more shorts, more longs after the pullback. So, there are definite time-based events that all metals are very known for doing. And I use those extensively. So if it's the wrong time of day, like for example, even if we wick above the Asia high, that's the wrong time of day for me. So I wouldn't be doing that just on the account of like, ooh, we've swept Asia. It's going to be like, yeah, but is it real? And another point is that I always look at bookmap, I look at tape, and I want to see very specific things happening. So, there's probably about 6 or 7 things that I want to see. Not all at once, obviously. But for example, if there's buying, but it's a big bubble, however, it's split in half, so it's long and shorts, and then the price is not really reacting terribly to that big volume, that tends to be absorption. So you don't really want to get involved until that battle between the big, large large lot traders is over, and you know who wins. So some of the other things, if we are breaking out, I want to see bubbles that are consecutively green and not one bubble green, one sort of red, and then another. That's indecision, right? So we don't want to see that. And similarly, if they're going to wick it to the upside, I want to see a sweep, and then I don't enter as the sweep is happening. I ask myself what is happening after that. So the sweep happens, and then we start to see ideally aggressive sellers stepping in, so predominantly large red bubbles that are pretty large in size. But if you have a wick through the Asia high and then nothing, they're just like tiny little bubbles that are just, that's not big players, right? So we need those bigger lot traders to step in if any sort of a serious move away from the Asia high is going to happen as a sweep. Of course, the sweep can have limited legs as well, because it is now a very strong market. So that needs to be taken into context. It is entirely possible to wick above the Asia high, then to just slightly come down, maybe tag 75.50, and then they go up again. So, it becomes more of a scalp. I'm usually using the larger time frame trend to figure out if I should be holding longs aggressively or shorts, or whether if we are in an uptrend, let's say silver, all metals really are in a huge uptrend. If you're short, I ideally wouldn't hold that in this situation where Asia went high and we didn't get the Asia sweep until this point. I wouldn't be holding any short opportunities for anything more than about 30 to 50 ticks. So it's more of a scalp at that point. But if I get a nice pullback either to 75 or ideally to 73 or even lower, and then they start to engage, let's say that we get to the Euro close, so we get to London close later on in the day, and then they start to engage, I absolutely will hold that until the end of the day, or as much as it gives me, right? So I will look to see how the rally after the test of an exhaustion of the entire range to the downside is doing. And then if the rally is decent and they are pushing it, and you can see that in the price velocity, not necessarily in traversion of the ticks immediately because it's a commodity, but you can see the engagement even if you look on the regular price chart, right? So let me see if I can find an example of that. All right, so here is one, I can easily go back in time on this chart. So this is the day when we smacked into the average day range high, did a nice pullback, and then they actually hit the opposite side of the average range, which I think moved quite significantly. Oh, no, it didn't move. No, that's where it was. Yeah, so as they made a new higher high, this one moves higher because then it's a dynamic measure, right? So it goes higher. And then they reverse. There's no wick here, but it takes more than an hour for this to come. And why? It's because it's the time of day. So what the hell are they waiting for? Well, they're waiting for the silver fix, and silver fix is midday. So once the silver fix happens, there's a little squiggle, and then finally COMEX begins. They go through VWAP, and then from there onwards, you can see that the engagement is a little bit tricky during the first 90 minutes, which is why I don't like trading the initial balance. And then after that, they just do one major push, and for the remainder of the day, they just keep trickling sort of upwards. But the intention is there, neither of these wicks represent more than a third of the wick to the opposite side, right? So it's all pretty strong. But you can see that on the tape with them constantly doing these little pops to the upside. So as soon as the price starts to fade, they go pop, pop, and then they raise the price, then they raise the price, and you don't want to fight that. That's big buyers stepping in and just being, you know, very aggressively long at that point. And you shorting when that's happening, to me, that's just, you know, FOMO and wishful thinking. So it's going to go short. It doesn't have to do anything, right? So we have to be super, super objective. I'll look on GC, given US and Venezuela. I don't think that the whole Venezuela thing is as big as you imagine it is. Like, Venezuela thing, for gold, I mean, that's going to affect crude oil and energies more than anything, right? So what they're doing over there, they're basically, from what I've seen, they're basically trying to get the oil, but they are doing it under the guise of dealing with cartels or whatever. Now, Venezuela does have oil reserves that are the biggest in the world. That part is true. The issue with it is that they have very poor infrastructure. Very poor infrastructure. It means that their output per day for crude oil is massively slow. Much slower than any of the other countries. And in order to bring that, so unless they're just going to take the oil that's already there, which would be a bit cheeky, you know, that would be, you know, borderline like aggression and stuff. But even, let's say that they get the extra oil reserves, okay, fine. Is that immediately going to bring the price down? Probably not. Why? Because they have no means of making more productively, right? So what they need to do is to invest in infrastructure that will be able to sustain higher outputs per day. Until that happens, any kind of movment in crude oil that results from that is going to be a little bit sketchy, okay? But once they get there, which could take years, so it's like more of a long-term play, once they build the infrastructure to the point that it can produce more, I don't see that. I think it's like called sensationalist journalism, to be honest, and, you know, just news, but people are reading way too much into it. So be very careful, very, very careful. Any rally could just technically lead to a sell-off. I mean, I looked at the crude oil options, and while I don't trade crude oil directly anymore, I do trade products that are heavily correlated to it, like heating oil and RBOB. RBOB being the slightly more popular one. Even though very few people know about it, I'm probably one of the, you know, 5 traders at Topstep who even trades RBOB, and I'm probably the only one trading heating oil. I don't know. It's a shame because both of those are much better than crude oil at the moment. So what I'm going to do here, let's move away from metals for a second, and I'm going to put crude oil on the left, and then I'm also going to put RBOB in the middle, and then also heating oil. Whoops, heating oil on the right. So if you look at this little rally that we have now, so let's measure this out, right? Crude oil looks like it's like, wow, it's gone so many ticks. In reality, this is barely $1 up, like 95 ticks is what we're tagging. And then if I look at RBOB for the same movement, we're looking at nearly a 200 tick move for the same movement, right? And then heating oil is very thin, so very easy to move. It actually rallied 346. So which one of these do you think I'm going to be looking at? Well, either this one is like a sweet spot, but if I can get a nice kind of short at some point, that would be a preferable instrument for me to express any sort of shorts as a result of maybe US getting those extra oil reserves. But it's not a game changer yet. And I've looked at the options chain. Really, the most serious positioning is up at 59. So this week, maybe if we get to 59, I may short one of these two. Today, I have no interest in longs, but if we fall down to 56, that's something to consider, and, you know, maybe do a long. But just remember that crude oil and all of these other products, they have a downward bias. The only redeeming thing for longs in this case is that we are coming away from a demand. So we are very, very low in the whole structure. Therefore, some longs are expected to step in. But look at how crude oil does longs. It's so tricky. Like, you have 2 weeks where it moves okay. And then in one fell swoop, they just erase the whole thing. Where is it happening? Usually between 70 and 75. So whenever we get up to sort of supply zones, I actually do like to do some riskier option strategies where I would be, short calls or something, which are, it can go very wrong if you don't know what you're doing and you're doing it here. Like, I would never do naked options here. So this area is more like, maybe you do, a long call or something and just wait until it pumps. And actually, I did have one when this was happening. I kept it for maybe 3 days and then I was out. So, it's, to me, crude oil at the moment with the low ranges that it's got, I don't think it's a very good product for intraday. It's not the same product that I traded for 10 years, for sure. But I will still use crude oil levels to position myself intraday for more tickage in one of these other two products. So if we get to 59, let's say we're sitting around the euro close as well. So loosely about 50 ticks range. So it's a 50 tick zone that I look at, 30 to 50 ticks. And then I see that they are losing steam. They are trying to hedge. I will absolutely pop in a short in either RBOB or heating oil. It's funny that this is now hog heating oil, G, which is, we're in March? We're in February still. Yeah. So yeah, that's my outlook on crude. I've traded crude oil for a long time. I have a pretty decent understanding of what events typically lead to it, and really only when the refineries shut down for whatever reason, you can expect a full smooth day of longs. But if the refineries are still working and stuff, any rally that I see, it just makes me sick, because it's like, I know it's going to turn around on me. And every time I was long crude oil, it tends to take absolute ages to reach 70 ticks these days. And then you think, okay, well, I'll just hold it for a little bit more, maybe 80 ticks. And then they just, in a blink of an eye, they turn it around, that short bias comes in, and all of that move is erased. So I'm personally not happy being long crude oil in anything else apart from the options, because the risk is limited there. There's no stops or anything. The long options, your premium is your risk. And to me, that feels a lot more stable than me trying to squeeze out 70 ticks out of crude oil, where it normally moves only 100 ticks per day. So that's a losing game. I prefer to trade products that are bigger, and then I prefer to take about 30 to 40% of the day's range as my target. And this is also why I absolutely need to have an average movement in a product that is a sweet spot between 250 and maybe 450, 500 ticks. Because then there's enough tickage for me to not have to do a million trades to get my, 140 ticks in a day. It becomes a lot less strenuous, and the dogs are being really spicy today. What time does COMEX come in and how is it significant? So it's not very significant for NYMEX because crude oil trades on NYMEX, but metals. Let's go to metals. Let's go gold, silver, and copper. So, COMEX is significant because it is the exchange where most of the pricing is done. Now, there's 3 important pricing events on silver in particular that happen during Shanghai first and foremost, which is why you see an increase in volume as soon as Shanghai Exchange opens. Then you have London, which is not really that relevant. Okay, so London and metals, if it moves, it's a rarity, right? It's like, wow, we've actually made a massive move. So what tends to happen for London is that we get stuck in a range on metals, but COMEX is the exchange that typically carries the highest volume. Why? Because they're the ones that are pricing silver towards the end of the day. So COMEX settlement is also used as mark-to-market in many countries. Now for London, we have the silver fix that comes in midday my time. So that's going to be another couple of hours. And then that's used as a benchmark for whatever you want to do with silver. But when it comes to all metals, COMEX and Shanghai are the more important exchanges. It's reflected in the movement as well, right? So if I go back, let's have a look at gold because I have the volume profile on that already. If you look at gold, so here is Asia. So Tokyo begins, seemingly nothing's going on, right? So you said nothing, nothing, nothing. This little candle here is, let me get across there actually. This little candle here, this little doji, that's the start of Shanghai. And typically the initial balance can be either a shakeout to the opposite side. Now we're talking 2nd of January, people are not around, there's nobody really to trade this. But Shanghai at my time is 1:30 a.m. GMT. That's when they begin to make the market. After that, you see this big move up, and then it just trickles higher. So Asia and Shanghai Exchange is very important in price discovery. That is the first session on the day in a 24-hour period for me and for many other people that brings you the idea of where they want to stop and where they're starting and how they're doing it. So this is why overnight high, overnight low, especially when it comes to Asia high, Asia low, on metals is incredibly, incredibly important. And then, as the day progresses, you have London, that is typically a snooze fest. There's a liquidity grab that happens between 7 and ideally 9 a.m. in the morning. So that's 1 hour before London and 1 hour after it starts. You'll be looking for that sweep above the high or the low and then a reversal. Now, depending on the context, if it's a long, I will then hold that long for the rest of the day because that's what the stats tell me. If it's a short, it's a shorter trade, so it's not something you can hold through COMEX. But if I'm not trading early in the morning, like today, I don't really see my setups doing anything. And the same goes for gold. Gold is actually even more terrible during London than some of the other products. They kind of move a little better. Today it's an outlier day because, again, we are in a bit of a weird time of the year where people are still away. Many dealers are not even going to be at the desk. So, this is all going to be like smaller players. And again, you can see that by the size of the candles, they are not committed. A lot of inside bars. Oh yeah, we're going higher. And then another inside bar, then a doji, then we're still in range, then we kind of break out. That's messy, and that really to me spells low volume trading. Until that changes, I don't want anything to do with this. So I look for movement that is either a mean reversion or a nice continuation that is supported by volume. When it's not supported by volume, I really don't want anything to do with it. So we'll see, we'll see. Anytime a new year starts, I don't rush to like immediately trade stuff. I am patient, and usually I like to wait until, COMEX. And if there's something obvious going on and there are dealers happening, there are dealers in the office in this volume, especially from around the LME start. Now, LME starts at 1140, but it's not that relevant for silver. That's relevant for copper. You will see a huge commitment in a direction on copper because LME trades base metals. So they trade aluminium, copper, tin. Did I forget any? They used to trade precious metals, but then they stopped in 2022. However, there's a bit of a knock-on effect because all of the metals are somewhat connected. So you would see LME start trading, and then suddenly you see gold and silver kind of livening up as well, and you're like, why? And there's a couple of reasons. There's the there's the silver fix at midday, so that happens 20 minutes after LME starts trading. But copper also starts to move, and then that kind of pulls through the correlation, co-integration, triangulation. It depends what you're looking at. It then pulls the others with it. So yeah, so it's an interesting thing. But COMEX value areas and how they are relating to the open of COMEX, that is what I call the open sentiment. And I will base my directional ideas and hypothesis, thesis, diagnosing the open sentiment at COMEX open. Anything else relates to whether we're close to Asia high or Asia low. So if we're not close to Asia high, Asia low, I don't want anything to do with it. So I'm very, very selective when it comes to positions. Every once in a while, I may do like a little bit of a punt trade if I'm streaming and I see something that is like, actually, let's, maybe do a few ticks. But the reality is that this is not the time of day where you can find the trades that will last you without drama for the entire day. That has to be done closer to the COMEX open, after the first hour of COMEX, or in Asia. But very frequently, whatever Asia does, like if you look at silver, so let's change this to silver because that's where my markings are. Now we have the upside, right? It seems like they're hedging around 76 now, okay? Am I going to hunt that? No, because I wanted to see a wick through and maybe a reversal, maybe a scalp. Silver, I cannot size down more than 1 micro. So if I'm wrong, that's going to put me in a hole on the day. If it was gold, I would be able to trade, 2 or 3 micros and still get, 100, 200 to get me started, or lose 50 to 70 on the day. But because silver is a large contract, like the big silver is 25 per tick, it's massive. And the micro is not really a micro. It's $5 a tick on a product that currently moves 780 ticks in a day. So your risk, let's say that we use VAR calculation, and you see what the worst or the best day was, what the size was. Let's say that was, I don't know, 9% on the day. So let's grab, actually let's have a look. Let's do a daily chart, and then let's see what the biggest day was recently in the last few months. I think it was the sell-off, wasn't it? That looks like it was the biggest day, right? Let's measure that. Yikes. Yeah. Okay. This is 1 day movement. 2,488 ticks. So even if you're in a micro, and let's say you're an investor, right? You're not using stops. You're just running as if you're buying a stock, right? The worst day for silver was 15%. So even on a micro, if you were to just pop in 1 micro and let it go, and it goes against you, you're looking at 12,440 of actual dollars of risk. That is what the VAR calculation is. It's not like, oh, but I can use a stop loss. That's not a VAR calculation. That's you trying to outperform the market. But the risk, the market risk, this is telling you is that in the last 3 months, silver's worst day, sometimes it's the best day, in this case it's the worst day, is 15%. Okay? So that's your risk. So in order for you to absorb that, you would need to have an account that is bigger than 12,000 on one silver micro. It's expensive, right? So I don't like doing punty trades on silver because it is so expensive. And I want to make sure that if I'm going to do a silver trade, it's going to be at the location that I request, not chasing weird levels away from my plan. And that just requires patience. It requires patience. So context, patience, diagnosing a chart, and then just waiting. Just waiting. So COMEX is very significant for pricing of the metals. It carries the highest volume, and I wouldn't be surprised if you see a move higher and then COMEX comes in and they just erase all of that. Because if you look at this in a volume profile as well, this movement, and if you just go like this is all done on thin volume, which means that there's unfinished business down there. And, you know, usually they will tag at least the edge of this. So 74.53, let's say. But if they start to accept the low volume node, this could just run all the way through to down here, so 72, 8 low. And I have seen that happen a couple of times. So here's another day. This was Friday. Yeah. Sorry. Friday, 2nd of January. They start. They run it all the way up high. We have the typical London sideways movement. See that? That's high probability. Slight wick above the Asia high. Then COMEX comes in. And, you know, this wouldn't be a very comfortable trade because you would be in quite a bit of profit here. And then the volume increase, if you're not using appropriate sizes on the stops, and if you've not really gotten a very, very good entry somewhere around 74, this would be very difficult to withstand this pullback. I can withstand it, but most other people would freak out as soon as the market would come and tag it. But what happened? They ran all the way down nearly to the Asia low. See? So this is Shanghai, then London, then COMEX. So imagine now, this is what we have now. So we have a day that currently looks something like this, right? It looks like it's up. Like Asia went up. Now we're kind of tagging highs, but we're sort of hesitating. We've just tried to go above the initial balance. And yeah, it might carry on higher, but that is an outlier rarity. Those kind of days are like maybe 8% where Asia sets the tone and then London just keeps going and then COMEX carries on. That just doesn't happen. It's like in your dreams once in a blue moon. Markets are more rotational than that. And if you are constantly working on high on hopium that somehow this is not going to happen, especially in a commodity, because commodities are very double-sided. You can have an uptrend. This is still an uptrend. Nothing's changed on a large time frame. But you need to understand the interplay between London, Shanghai, London, and COMEX. And that is that COMEX will more frequently fade the Asia move than anything. This is why I prefer to run my setups once we've gotten closer to either the call wall or maybe, you know, the value area or ADRs get exhausted, then I will trade. So that's what makes me somebody who prefers to have more data when I'm getting involved rather than getting involved in the craziness of the open. I've always hated trading the open, and there's nothing that I'm missing. Absolutely nothing that I'm missing by not trading the open. I had a very good end to the year. I did, the last 2 days was 2.8 and 4.2K on this account. And then Friday was just like 600 because it was not giving me, by the time that I looked at it, because I was busy during the day, we had some guests, and then I looked at it, so I managed to capture a bit of this towards the end of the day. And that was it. So yeah, it's very important to be selective with your trading locations if you're looking to capture more ticks. You can't have it both ways, right? You can't hold trades for hours, not be selective, suffer from FOMO, not follow the levels where you want to be a buyer or a seller, and then hope that somehow by some strange, interplay of universal forces, you're going to get a trade that is in the middle of nowhere that just keeps going. So the way I'm looking at this, we have limited upside. Why? Because London average session range high is not too far. So what is my risk here? The risk is all the way down here, because that's where the previous low is. That's where VWAP is. And that's also where one of the minor GEX levels is located, right? So that's the risk. So why would I go here when, and it's trying to front run this. This would be, might work. Sometimes it might work. But that's where the lack of confidence comes in. You get into these trades that don't make a lot of sense, and then they have a lot of drama around it. And then you're pulling them off way too early because you're not sure what's happening. Once you change that, this is what market profile did for me, right? So even if I'm wrong, I know what went wrong, right? So I can look at the TPO profile. I can look at the volume profile. I can look at the open sentiment. I can look at where the average ranges were. So even if I got involved in a sucky trade, it's either because I got a bad fill, or maybe I was too late, but very rarely am I too early, because I always want to see what they want to do. Who's they? The wizards, the dealers, right? What are the dealers going to do that have much deeper pockets than I do, and they have a lot more cash flow to blow up some of that cash on the intention that they're trying to do, because that's their job, right? They have to generate a lot of transactions. They have a volume to fill on the day, and they have to actively hedge against the major position. So in this case, I do think that they're short gamma. So they are basically short calls. And if we go above 76, there is a chance for a squeeze. Absolutely. But we're not there yet. We're hitting the wall, and they keep selling it, hitting the wall. So until that changes, I don't want to get involved in that. The wrong time of day, everything's wrong, right? It's all wrong. So until everything's clear in my head, and I can both visualize what should happen, and then that starts happening on the charts in regards to time of day, price action, tape, and the level that I'm looking at, I don't want to be involved, right? Many of us who have been doing this for many years, we do end-of-year reviews, and certain patterns start to pop up at you. You're like, what was I doing there? And then, for especially the first sort of 3 months, you sort out your issues that might have creeped in over time. And it's never, oh yeah, now you can trade and you never make mistakes. There's always a sliding scale of skills, right? So if I'm away from the market, like let's say that I took a break for like 2 weeks and I didn't look at the charts. When I come back, I'm not going to jump in immediately into an account that matters, right? I'm going to go to a combine and try to get back into the game. So it's very much like being an athlete. It's not, it's not like, oh yeah, we just click buttons. You have to retrain your brain to remind yourself how you approach this. And it does slide away a bit if you're away from the charts. So we're all very aware of that. But the end of the year, especially if you traded in the run-up, you kind of figure out some stuff and you're like, I shouldn't be doing that. So let's exclude those and let's just focus on this. And this is what keeps us in the game, right? I wouldn't be doing this for 19 years if I didn't do this. And I actually do this for myself probably every 2 months. It depends on, how things are going. If I'm behaving myself and if everything is, still fine. But even on a day when I did everything right, but it didn't work, I'm like, okay, let's see why that didn't work. And then it would be a case of an outlier day that I was maybe trying to front run a mean reversion, then that didn't work. Or I was maybe rushing, or maybe I was trying to maybe use a smaller stop or something. And then the trade would have worked, but I wasn't in it. You know, little things like that basically make you or break you as a trader. But with me, I can pull that back within like a day. It's not like, oh, now I need to set a task and I'm going to work on it for 2 weeks. It's not like that, because the skills are there already, and you're just like, oh yeah, doing that again. Let's stop, and then you just carry on, right? But yeah, it's important to know the interplay between the sessions for the metals. RD says, I'm long from 74.98 in silver, trailing for 75.610 for a target of 76.500. The target does make sense. Whether you're going to get it cleanly, I don't think so, okay? I'm going to be very straightforward. Your entry is fine, but expect a retest. Now, you're trailing, so if a retest comes, you'll be out. Your trailing won't allow you to withstand the pullback that might be coming before COMEX. It might not come now, but it might come after the silver fix, so that's in another hour and a half. I don't know anything about your style, so I don't know whether you know, just by the fact that you want to shoot for 77.50, I would say that that's a lower probability target. 76 was your first target. That's Asia high. So, you know, that's like the first high probability trade, that they're going to wick above it and then do a little pullback. The pullback probably won't be as severe today until COMEX comes in, and then we'll see. Right now, I don't know, but I would say with like, again, your trade is not trading advice, but if it was me and I was long from 74.98, I would be taking my profits at Asia high. So I would already be out. I wouldn't be trailing anything, because that's a trade that worked out. Trade number 1, done. Reset. Go rest for 2-3 hours, then come back. Okay? I certainly wouldn't be holding it for 77.50, because this area, London low as well. London low gets taken a lot of the times in COMEX. So that would be another alternative, right? So you have London low, which is actually an ASR low as well. At the moment, they are at the same price point. So this 74.71 is definitely a liquidity grab area. So I would expect a pullback at least to there before more longs, or before they should start to run it back down into a mean reversion towards this GEX2 level at 73. But is 77.50 possible? It is. Drama-free without pullbacks? No. Probabilistically, that's a low probability. So if that does happen, that will be one of those 8% days where they just kind of keep going. Do they have juice to do that? Well, right now, on a 30-minute time frame, they're actually below the average volume. And even on a 5-minute chart. I mean, does this look to you like they are engaging above the Asia high, which is what you will need for your trade to work out? They're not. Not at the moment. They've gone out to, I don't know, get lunch, grab coffee, cure a hangover, I don't know, but they're not there, right? So you need volume above Asia high to confirm the continuation. We don't have that. We smacked into Asia high just. They didn't go over it either. They kind of just got barely to 76, and then they went down. Is it going to go higher throughout the course of the day? Yes, but your trading stop is not going to allow you to stay in. So I would just grab the dollar that you have, right? You have 100 ticks here. Like, what are you waiting for? Just book the profits, man. That's what I would say to myself. So if I was long and I'm already like 100 ticks and it's starting to mess around and it's kind of losing steam, I'd be like, D, just take the profits. Just take the profits. You've got 100 ticks. It's fine. It's a good, good buffer on the day. And now this is all just prone to the Asia high liquidity sweep at a reversal and pullback. So you're going to be losing profit because you're chasing some arbitrary target that currently cannot be confirmed by the chart diagnostics. Can it happen? Yes. Is it high probability? No. You've got a very good trade here. So, you know, that's what I would be doing, especially for this time of day. Normally, I like to trade either the Shanghai if I'm awake, or closer to sort of midday after that London fix happens and after we start to get the pre-market volume stepping in for COMEX and LME knock-on effect. But chasing breakouts, it may happen at a rate of 8%. This could be an 8% day. It could be. We're in low volume. Things are easier to move. But wouldn't they go above the Asia high and hold it there with increasing volume? So we have decreasing volume, very non-committal price action here. I don't know whether there are any big players around because I haven't really looked, but this doesn't look like big player games to me. But yeah, so I think 77.50 is a little bit rich for this time of day. And if I was you, if I was in the trade from 74.90, 98, I'd just book that. It's a great trade. It's a great trade. So let's see. Yeah, I mean, not only do you have 100 ticks, you have nearly 200 ticks. And you're shooting, you're aiming for a very unrealistic target of over 500 ticks. Why? That's the only question. Why? Because you want more. But you've got 200. Take it. Take it. 200 tick trade is a massive trade. Especially on silver. Yeah. Tech or oil? Neither. What's COMEX? COMEX is the metals exchange. So precious metals are traded on COMEX. Can you show us HG? Yeah, I can. It's been a little quieter than the rest of them. That doesn't have to be a bad thing. I don't have levels on it. I didn't do my homework yet, so we can do it together. I haven't even looked at the option chain, which is bad. Okay, let's do copper. So what do I want? I want a copper chart, which is not up. Okay. There it is. Okay. All right, copper looking a little different. Copper is exceeding the ADR high. Why? Because we are actually trying to expand the pathetic range that copper has been in for pretty much since the summer. 584.50 was the ADR high. We've clearly gone above it, and that line is now acting as kind of like a back test for further bouncing. I just moved this. It's annoying. 84.50. Now, Asia high. Is that Asia high? No. So Asia high was here. Why? Because we don't do the Asia high after Tokyo closes. So at my 6 a.m., this is already a sweep above the Asia high and that reversal, the liquidity grab that I talk about. But it had a limited profit margin. Why? Because we had already gone above ADR high, and this is also a very bullish product. So again, context matters. These are some anchored VWAPs that I've done intraday, so we're going to get rid of those. We are into, I believe, the all-time highs now. Are we? No, not in the, well, I've got a lot of shit on here. Let me clean up this. I haven't looked at copper too much recently, but this is all from last year's trading, and as we went higher, I just never deleted anything. So that needs a clean up. Clean up for the new year, yeah? Lines upon lines upon lines. We're not in the all-time highs. Interesting. Okay. We are ignoring the supply. Ignoring the supply. So there's a conterminous line if you are a market stalker. There was a conterminous line here. We ignored it. Whenever you hit the nearest edge of the supply area where the market shift happened, you want to see a commitment and a break of structure to the opposite side. What happened here? They tried, but then it ended up as a buying wick, not breaking anything. And now they're trying to go higher. This accumulation, this is probably going to be reaccumulation rather than a distribution. Why? Because all the other metals have gone into the all-time high, but copper is lagging. I don't expect this area to bring a meaningful reversal because they failed. Maybe once they hit $6, maybe that will happen. So that is like an area inside it. There's a nice round number. I'm going to make that solid and white. And now I'm just going to ping my algos into the API so that it can chew up some levels for us without me losing my eyes. Without me losing my eyes. All right, so let's do a prompt. Run. This is going to take a little while to crunch the data. And while that's doing that, I'm going to have a look at what LME has done. So this is a COMEX. Now I'm going to do LME values here. This was pretty quiet on Friday. So really, we are just picking up speed on copper. It looks more bullish than the other two to me. But we'll see what the options chain has to say for itself. But yeah, the ADR high disappeared. I don't know why. Let's put it back. This is red. Okay. So yeah, wake above the Asian high, pull back. Where is the Friday value? Way, way lower. So that's not much of a reference. Asia low, also very far away. And Asia high was here. Similar outlook, very similar. All right, so let's have a look at the options chain. So unlike the others, I don't think that the squeeze is very high probability on here. First of all, because the squeeze would have to break some levels at 590 and they failed at the first try. So this is where line in the sand is. So if they go higher than that, maybe, but again, until they hit 6, it looks big. I'm talking about the levels that could come in throughout the week, not necessarily today. But right now, I would expect to see the market just going in a mean reverting manner. So some of the levels to the downside is 580 if I'm looking at gamma exposure. That's not too far, so that's here. And then we have, from the end of day outlook, we had some calls and puts between 575 and 572, but they seem to have disappeared throughout the day, which is an interesting thing. So really 575 would represent like a deeper support, but the 580 is closer. So let's see if we can. I think it's just going to chop between 580. So we have some calls there. It's a minor kind of support. And then 75 would be a deeper one. 75 there. I don't think we're going back to 570. But at the moment, I would expect mean reversion moves between 580 and 590. And then we'll see. If we break above 590, I would expect to see 6 at some point. Is that going to happen today? Probably not. We would need a big catalyst for that. Copper is not that reactive to disturbances. So if we have any sort of, uncertainties and stuff, gold and silver would be more appropriate. And disturbances, I mean like war-like situations. Whereas copper is just like very sensitive to inflation. So if there's like an inflation release, I focus on copper. Today, I don't think we have enough drivers. Let me have a look at the calendar, actually. This is so good. Like, you make me do all the work. Yes, so we have ISM manufacturing PMI. That's more likely to affect silver and gold than copper. And then for the rest of the week, what do we have? Whole bunch of PMI. Okay, so we have CPI from Australia. Okay. Unemployment claims, that's going to be meh. And we have the non-farms. But non-farms are back on Friday. Why? We're actually going to see a release on a normal day. So yeah, copper, I don't know whether that's the best product for today, frankly. But if you're going to trade it, expect that it's going to be massively slower than everything else. It is very active during Shanghai and during LME and COMEX. After COMEX is done, and even actually after LME is done, which is my 5 p.m., that's like half an hour after the London close for the stocks. Copper just goes dead on most days. So unless you are okay watching paint dry, because it can still work, they can still get a nice trade out of it. In fact, I've done some slower sort of fade moves after that, but they last like 4 hours. So it's definitely not for the lighthearted. Crude oil is flat, even with all that's happening. Yeah, this is what I warned people on Twitter. There's bigger things happening. So don't expect that crude oil is suddenly going to be like, yay, we're back. Let's do 500 takes in a day. It's going to be like, oh, I've done my $1. Maybe I'll go another $1.50, and then just stop. Crude oil is not the same crude oil that I started on. I will be perfectly honest. And I'm sad. I think everybody who was a crude oil trader, we miss it. We do miss it. Luckily, we have RBOB instead. What's happening with NQ? I have no idea, dude. I'm not an NQ trader. This is the metals markets show. Okay? So stop asking me about NQ. You want NQ? You have about 1 million other streams where you can have a look at NQ. We're here to talk about silver, gold, copper, platinum, and energies, crude oil, RBOB, and heating oil. Okay? We clear on that? Good. I want everybody to be on the same page. I am not an equity trader. The only equity that I still trade is DAX, which we can't trade on Topstep. Do I sometimes do ES and NQ? Sometimes. But we're talking like so rare at this point. Maybe like once in every 2 months I might do a trade. NQ annoys the hell out of me because it's a spastic product that I don't think is suitable for over 90% of people who are trading it. And yet you're all obsessed with it. Why? Because you saw somebody else doing it. And then you're basically monkey see, monkey do, right? Oh, well, if they're trading NQ and they're making all this money, it's going to work for me. It won't. For 90%. In fact, the stats says it all. What's the failure rate? 97%. 97% of traders fail. Why? Various reasons, but one of the big reasons is trading products that are not suitable for their personality. You get emotionally dysregulated looking at the chart. So I'm not really a supporter of people doing NQ. I move people away from NQ. And I'm like, go trade copper. Anything. RBOB. Anything. Just don't trade NQ. So please don't keep asking me about NQ. Again, you have millions of streams on YouTube that cover that market, and I'm going to stay in my lane of being a commodities trader and talking about beautiful trades that we have going on in silver right now. And silver, even with all the drama, I still find it smoother than NQ. Just the way it's moving, right? Gold is a little bit meh. So again, if you look at price action on gold, it's, I mean, look at this. At least silver, yes, it's a bit spiky here, but it's got a direction. This one up. Well, we try to go up, then we go down. Oh, one up, so now we're going to try to go up and then go down. Gold has become very much difficult to trade. And I think it's because it's more speculative now. More people are trying to trade it. Anytime a product gets a whole bunch of smaller traders that don't know what they're doing, that always prints as unclean price action. Because now the big boys are having to fight a whole bunch of new speculators who are also a part of the whole market making situation, but they are not trading with enough size. However, they're causing noise, extra noise. Does that make sense? And I've seen gold doing that. Whereas silver, for now, even though everybody's talking about silver, it still remained a little tame. CFT says, I'm an NQ trader and it's awful. So don't be an NQ trader. Yes. Recently added comics. Yeah. Exactly. Even silver instead of NQ. Even silver. Yeah. Yeah. Flash Golden says, nice coat, D. Looks like you just got back from a Prince 80s concert. Hey, I love the 80s and 90s fashion. We have Stranger Things. 80s fashion is back. This is not a coat. It's actually a blazer. And because I'm planning to trade silver today, I'm wearing a silver blazer. So I am a former rock musician as well. So I figured I would add a little bit of my personality from back then. Although I won't be redoing the piercings on my face because I used to have a pierced eyebrow, pierced nose. That's not coming back because I'm too old for piercing things at 45. But, nice snazzy metallic blazer. Why not? I actually have 3 blazers that are gold, silver, and copper. So depending on which one I'm planning to trade for the day, I decided that I was going to wear those. So what is D trading? What is she wearing? Just a bit of fun, M2LL says good morning. Good morning. Good to see you here. Soybeans. No, not ags for me. If you want ags, Coach Hoop is your man. He's traded corn, so and even grew and sold corn because his grandfather left him some land when he was a kid. And then he traded in the pit. He traded lean hogs and cattle. And I think he knows a lot about soybeans as well. I have maybe done one trade in soybeans. There's a lot of stuff you have to know about harvest and supply and demand based on physical harvest and the quality of the harvest. It's too much. So again, I stay in my lane of commodities in regards to precious metals, base metals, and energies markets, which is where I have the most experience. So I started off as a forex trader and then very quickly moved into futures. Crude oil was my baby for a long time, along with gold. So both of those asset classes are something that I know a lot about, and I understand both the technicals, but also understand the fundamentals pretty decently. I'm not a core fundamental macro trader, but macro is about 30% of my analysis. Not every day, but if something is happening that should affect the price in a certain way, I will definitely take it into consideration, right? It's not gonna be the be all and end all, especially not if I'm looking to fade something for the euro close for the next 15 minutes. Like macro does not come into that, but if I'm looking to hold a trade for 4 or 5 hours on the account that there's maybe a problem with a physical supply or something like there is in silver, we also need a good trade location for the market to withstand the movement over a number of hours. So if your trade location sucks, so will your trade, and you're not going to get the big tickets that I can get in the way that I trade. And that takes time, it takes skill. So me adding more products, I don't think it's necessary. And look at them now, they're doing exactly what I said. So 76 was the ceiling for now, and they're now hedging around it and getting stuck in a range. So if I go over to the 15-minute time frame, Flatty McFlat, right? Flatter than Kate Moss's chest. Terrible. So until that resolves, we are going to have to wait. So either a nice pullback or a breakout. But I'm thinking probably pullback with the way this chart is looking. I don't know. We did a buy and wick here. So right now it's just range, range. How do I control the urge to trade when you know the timing isn't right? I don't actually have that problem. So I've never been much of a gambler. If my level is not there, I just don't have the urge to trade. I certainly don't sit here. Like, for example, once I get off the stream, I'm going to go and play video games for 2 hours. I have nowhere, and I'll set alerts, right? I have Trading Bureau alerts that come to my phone. If the level gets hit, I will sit down. But I do have the additional 90 minutes in the afternoon when I do look at the market. And if I don't have any alerts set, I will sit down for the next day trading time zone for those 90 minutes, and I will see what levels are around and what they've done up until then. I'm not going to be sitting here for 8 hours, and this is for 2 reasons. I've always had day trading time zones for work rather than losing my eyes for 12 hours. The first part was my setups are very time dependent. So me trading outside of those time zones, it's completely pointless. It just saps your energy. The second thing is I do have some chronic health issues, which are very energy limiting. So even if I wanted to, I don't have enough energy to sit here for 12 hours. I don't. So that calls for me staying away until the level is there. And frankly, I never really had a problem waiting because I come from the first 5 years of my trading was swing trading. So I would wait for like 2 weeks for my level to get reached, never mind 2 hours. So I immediately started off, and I think this is where the prop industry, the way they are now, faster, quicker, no evals, fast evals, don't spend any time in combines, quickly. It led to this TikTok variation of a trader today, where nobody has any patience, everybody wants their targets right now, and honestly, that's like in stark contrast of what a trader should have as a skill. Patience and waiting and not doing anything should be like the majority of your day. You don't get rewarded for time as a trader. So you need to like get that idea out of your head that if you sit here 9 to 5, you're going to make money. No, you won't. In fact, I'll bet that you'll lose money. But be selective, set alerts, go do something. So somebody once said, the secret of patience is doing something else in between. Make like design distractions for yourself, but set alerts, okay? Just don't sit there losing your eyes, because nobody's going to reward you for time. That's not how trading works. You get rewarded for being correct at the right time and booking profits without FOMO, without, letting it play out. So again, patience, letting the trade do what it's supposed to do. You will not get payouts for the number of hours that you sit in front of a screen. That's the stuff that they want you to believe in other jobs, right? So you work harder, you work more hours, you get paid more. When has that ever worked for anybody, okay? I do work hard in other areas like my business and websites and whatever. Like whenever I need to do something technically, like let's say I'm writing a new algorithm or something, yes, that's going to suck easily 12 hours of my day. Why? Because you get really engrossed in it. But it's not like, oh, I'm doing this for money. It's like, it's interesting and it's a problem that you need to solve. And then it just irks you, like it pecks you in your brain until you get it. And even in those situations, if you get stuck with something technically, it's actually better to leave it for a day, sleep on it, and then your nice subconscious brain works on a problem and solution. And then the next day, everything is clearer. So in trading, you need to have a location in mind, have a direction in mind, wait until that area comes, and then strike. So honestly, the way I see people struggling, I would say that you're putting way too much time into the chart part of things, which is fine if you're just starting. Like if it's your first year, right? You're going to get obsessed. You want to backtest. You want to look at things. But just don't sit there staring blankly at the chart and then expecting that you will see something. Again, that's not how trading works. You need to have location, direction, and trigger. Okay? And exit. So sort out those 4 and your life will become a lot easier. That means you don't have to sit there. You know when your setups will probabilistically come in. Therefore, you cut the amount of time that you spend there just staring at the charts mindlessly, losing your eyes bleeding, not sleeping, and then doing stupid trades. Why? Because our brains are designed to see patterns. So the more you sit there, like, you know how Hogue says, if you're looking for a trade, you're going to find it. Very true, right? So you are sitting there and you're like, I need a trade. It's the worst thing a trader could say. I need a trade. The markets couldn't give a monkey's what you need, okay? They're going to do whatever they do. So the sooner you understand that time does not equal money in this business, and that it's okay to not do anything whilst the level is not there, and that it's okay not to trade on some days, you will experience freedom like no other, okay? And it will open up the possibility and avenues of you doing something else as well. So, for me, it's not just hobbies. I can't do too many hobbies because, again, energy limitations. But I love video games. I love coding. And I love creating YouTube videos. Less of that because, again, they take a lot of time. But it's something that takes me away from trading, but it's also related to trading somewhat. Not the video games. That's different. Right now, I'm playing a game called Satisfactory, and I'm so into it. It's all just like factory building, and you start off slow, with a whole bunch of spaghetti of like conveyor belts and stuff. And then you start building these like enormous factories. So I gravitate towards building things just naturally, rather than like going and fighting a whole bunch of people and shooting people in like CSGO or somewhere. So I prefer my time to be spent elsewhere, away from the charts. So, you know, find your design distraction and use it heavily. Use alerts, anything. We need alerts at Topstep. I think they have alerts, but they're not outside alerts. I think they are, where would that be? Maybe here. Because I use alerts on TradingView. What would that be? MISC? Yeah. So enable visual alerts, enable sound alerts. They are there. They just can't. They can't send them out somewhere. But TradingView has them, so you know. I mean, I use about 7 different platforms for various purposes. So I'm not super married to any particular platform. I have the logic on one of them for my indicators, and everything else is more of an execution platform. But I do, you know, like the way Topstep is so clean, it's probably the platform with the least amount of learning curve, because everything is just there. Like you can find everything really easily. But that's not to say that I don't use other things as well. You know, I've been in this business for nearly 20 years, so obviously I'll have my tools and I will be set in my ways and whatever, so it is what it is. Out of all of these 3, gold is actually looking the most promising to make a run to that 4,500 level. The rest of them are a bit sketchy, to be honest. We're still sitting below Asia lows, and gold is actually broken out. So maybe that's a better choice today. So yeah. Luz Re says hello. Hello. Just pass some 50K accounts. Best way to scale safely and properly. Use micros. Set a daily loss limit to no more than 200 per day. And start small and slow for now. It's not forever. It's just to build some buffer and to get your feet in the 50K account. I also wouldn't copy trade all of them, because you're saying plural, pass some 50K accounts. I would probably not copy trade them in the beginning, just in case you mess it up, right? Just in case you go a little bit nuts. And the button that's going to become your best friend should be lock risk settings on the day with that daily loss limit. Now, I use something else. I use maximum trades per day, which works better for me. But most people need the personal data loss limit. You have to click this button every day, because that means you can't change it. What happens when things start going wrong is that you want to make it better, and you're like, no, just one more trade. Famous last words. And that's where locking out the risk settings. So you tell your brain, there's no more. This is it. There's no more. You're done. Once you surrender to that and you go, it feels terrible the first few times, right? But over time, your brain starts to work within the constraint of this newfound problem. A daily loss limit, or a particular number of trades per day, which is my favorite. So if I go over 5 or 6 trades in a day and I scale it out, right? That's too many. That's too much. So if I'm not able to make money in 5 trades in the whole day, I should not be trading that day, okay? And this is where the settings will lock me out. Just like, no more D, it's done for the day. And the sooner you start realizing that stopping for the day is what's going to save you in the long run, you're going to do just fine. But no, people people basically don't lock the settings, and they start changing them as the day is going into red. And look, some days you'll be able to pull out of the red day. but it's a bad precedence. It tells your brain that it's okay to mess with the risk settings. That's not going to create good trading habits in the long run. So it's very dangerous. You're teaching yourself bad stuff, and that being undisciplined can still result in a positive outcome. So we don't want to do that. We want to feel nice and good and disciplined when we get stopped out. You know, Coach Paul says, love your losers. I'm very much in that camp, right? So love the control losses. Try to find gratitude that it's only a small, tiny control loss or medium-sized loss. But don't go off the rails losing everything and anything in a single day. So many times I see people in chat, I was up 12,000 and then it's all gone. How can you blow up 12 grand in a single day? What sort of, like, what were you doing? What sort of size? Because obviously you trade with a lot of size. You try and trade full silver contracts, 12K goes nowhere if it goes against you or any kind of problem occurs. It's nothing. It's like, it is gone, right? But if you are risk aware, which is what we're supposed to do, we are risk takers, but we are also risk managers. And the two problems that I see, people are not managing risk and they don't want to take the risk either. You spend all of your time how to remove the risk of loss instead of working with, I accept the loss, this is where my invalidation is, I'm going to let it go. I might pull it off early, but I'm certainly not going to mess with the stop, trail things. You know, basically trading stops to me is a way to avoid the pain of losing. For most people, not everybody. Obviously, you talk to some more advanced traders, they have a way to scale stops systematically based on something that they've noticed over the years. But most of you will be trailing at completely nonsense levels. And then you're like, well, I'm trailing. Based on what are you trailing? Is there structure to support that? Like, let's take our friend's Addy's trade earlier, right? So he was in from 74.98, if I'm not mistaken. So where is the structure here to trail? Like, there's like a nonsense low here, but that's not a structure that matters, right? So you're just asking for it because any kind of low that is an inside low, but it's still within a bigger swing, that's up for grabs for market makers. So you're literally immediately putting yourself down into a situation of getting your stop grabbed because it's not an important stop. But if I feel that at 76 they started to hedge, like I told you earlier, and everything's starting to go a little bit weird, and we're losing steam, look at what happened now. Why would I keep holding a trade if I see that the steam is running out? And then it starts to break the little microstructure of the consolidation to the downside. I'm out. I'm not going to trail. I'm perfectly aware of reading the price and knowing when the trade is invalidated, right? But I'm also aware that the 75 entry is not nearly as strong as, for example, being 73 entry. So if we ever get down today to like 73, maybe even 72.50, that'll be my area to find some stronger longs. I may even go into an overnight trade on the basis of the same thing. So continuation. Started here, maybe wait until Shanghai opens, pop in another trade. So it's kind of like a swing trade that I've split up over 2 sessions. But the trade location has to make sense. If COMEX tags 73 and then massively bounces out of it, that's my intraday trade done. No overnight Asia trade needed. But if it just starts the story and then it doesn't end it, and it's just like beginning to move away from 73, that's when I will look for the Asia trade. And the way I do that is that I will sleep, set an alarm, wake up around the Shanghai open, look at what's happening, pop in a trade if there's an opportunity, and then go back to sleep. I have an alarm for those days at 6 a.m. to take the trade off, but on some of my other platforms I actually have an API that just kills the trade immediately at 6. Why? Because it's the Tokyo close, and very frequently after Tokyo close you have something like this happening, because it's a take profit move after one of the major metal exchanges closes. After Asia is done trading. There's a take profit move. So very time dependent. So to me, that creates structure. It doesn't create a need to sit here a million hours a day. But yes, just start slow. Set a data loss limit, lock out those risk settings, and expect that maybe the first week is not going to go that well. Adjust expectations. Just say, okay, this is going to be a bit sucky, but I'll give it my best. So don't blow all the accounts in one go. So don't copy trade. Leave them just in case things don't go well on the first day. So that's the biggest suggestion that I can give you here. Somebody said, oh, let's keep buying silver. Not right now, mate. So I don't know when you joined the stream, but I spent most of the stream. Yeah. M2LL says, Deeyana, where are you from? We love the accent. Who's we? I am originally from Serbia, but I've lived in the UK for 25 years now. So I've lived here longer than I've lived in my native country. And therefore, my accent is a weird blend of British, some Serbian, but not much, because, you know, obviously Serbians have a harder accent usually. And then I also work with a lot of Americans. And for some reason, whenever I am physically in the States, my accent starts reverting to the accent of the people around me. And I can't help it. It's the weirdest thing ever. So I land there and suddenly I'm like, yeah, let's go get, like if I'm in New York or something, I'm like, let's go get coffee. And I'm like, since when do I say coffee with like a W? Like, what's wrong with me? And it's because everybody around me is saying that. And it's just my musician brain doing mimicry. And the same thing, like whenever I go to Los Angeles, where one of my best friends is working as a real estate agent. She's lived there forever. I start sounding like one of the Valley girls, you know, like I start getting this, and it's annoying. It's very annoying, but I've been trying to kind of stick to my own accent whilst I'm doing these streams. So, but yeah, my accent is a mystery to everybody, but a blend of British, Serbian, and maybe a bit of American here and there. So, yeah, I'm always changing the accent. We also had Australian friends at one point. So, you know, both me and my husband, even though he's like pure English, we were saying things like water and better. It's like, stop it. Don't. Stop it. Short reversal of silver. I think that's a bit... I wouldn't short silver because I think that if we... Look, I have points where it's like, right, this was a major area and now we're breaking it. So if we break 74.50, I would be looking for pullbacks for shorts from maybe VWAP or something that makes sense, maybe a test of 75 from the bottom. Right now, this is just like, to me, a range-bound mean reverting thing. So right now, it's already in the middle. If you want to long it or short it with a view that it's a range, 76 or 74.70 would be the cleanest areas. And then I would only be looking for the middle of the range as my profit, which is not bad. You know, we have a big range here. So it would be like 111, let's call it 100 ticks profit. Why? Because in a range, the middle is your highest probability target. Not the opposite side, not the full rotation, even though it may happen, but a lot of the rotational days, you'll be looking to short the top, take profits at the middle, long the bottom, maybe because this is an upward market, maybe you can extend that, but generally that would be the gist. So mean reversions of the edges of the range, not in the middle. I'm waiting for a bigger move, so I'm not losing my eyes on a Monday, when I also have group coaching to do today. But yeah, all right, so that's pretty much it for today. I don't have anything else. We are at time as well. I do not use Fed retracements, no. I use volume profile, gamma exposure, quantitative extremes, and time of day. So those are my pillars. I do not use any lagging indicators nor fib retracements, not interested. But yeah, so join me again tomorrow. But before then, we will have group coaching. You will see me there with a couple of my team members, my colleagues, for some more questions. So come and join us. In the meantime, let's start this year nice and slow. Please don't blow up an account on the first real trading day, even though technically that was Friday. But yeah, let's try to change some things into the 2026 period. Let's grow together. And until then, I'm Mark Stoker-D, and this was the Eurotrade on TopstepTV. I will see you a little later. Take care.